This is Daybreak Asia. We're counting down to Asia's major market opens, and high to US markets shut for Memorial Day on Monday. So not a lead in from Wall Street, but still equity futures were telling us we can expect a little bit of upside in the session today, perhaps.
Yeah, and it is that sort of combination of stronger data that we've had. Of course, the inflation numbers, not just from the US, but really globally this week, will kind of paint a better picture of expectations from global central banks, including the Fed, in terms of is it going to be higher for longer and just how much longer before we get to easing.
Yeah, the big question is when are they going to be ready to sort of shift away from their current policy settings, and something as well we track very closely, but for different reasons in Japan. You've got the open here for Japan, South Korea and Australia. And as we said at the start of the day, a few different things that we're tracking here this morning. Firstly, just some data to note. 10 minutes ago, we had Japan releasing its services producer prices. We actually saw that outpacing expectations, so a rise of 2.8% versus the estimate for 2.3%. So again, still trending above the BOJ's inflation target. Yesterday, we actually heard from the BOJ governor indicating, Ueda, that they are open to policy rate hikes in the months ahead. A question of when that could next be, but we do still see traders very much advocating for that to happen, because you've got the 10-year yield here, for instance, now above that 1% mark. So we're sitting at those levels we haven't seen going back to 2012. Japanese yen, of course, still reflecting those fundamentals between the BOJ and the Fed, and you're trading around that 157 mark this morning. What else we're tracking today is stocks. We've got those trending fairly steady so far in the session. As we said, US markets were shut Monday, but we did see European equity futures moving, or European stocks moving higher intraday, with the expectations that the ECB could be looking to cut rates. The broader index as well flat so far. But let's take a look at what's happening this morning in Korea. Again, it's sort of some of the similar themes that we're keeping an eye on today. US futures, again, fairly steady so far. One stock or group of stocks we're watching in particular is Hive and SM Entertainment in Korea, given we've got Hive initiating a block trade of SM Entertainment shares, and that is actually coming at a discount to the SM Entertainment last close, Heidi.
Take a look, Belle, when it comes to what we're trading across Australian assets as well as US Treasuries that we're watching. This is a picture for the Aussie session. We are just less than 2 minutes into the start of the cash session, right? And it is a staggered open, so unsurprisingly not too much of a strong move either way. We are expecting kind of muted gains, if you will. The Aussie dollar also seeing pretty muted gains there. 66.57, one of these sort of China proxies that does well when we get some decent news out of China, and we did, both in terms of that big chip investment announcement as well as the reaction that we saw in the dollar from the industrial profit numbers out of China as well. It did show that large Chinese industrials seeing some gains in earnings in April from a year earlier. So another sign of perhaps a nascent recovery there, and that's boosting what has already been quite a bit of upside, about 2% in the month of May for the Aussie dollar. Taking a look at Treasuries, of course, as Belle mentioned, it's been a pretty muted kind of holiday sessions that we're dealing with, but still bond futures are kind of yielding, inching up, that we see across trading at the moment, as we saw that sort of pressure on Japanese 10-year notes as a result, as we saw, of course, the comments around the end of deflation from policymakers yesterday. And of course, one of the things we're watching is oil. And interestingly, Belle, despite some of the terrible, really geopolitical and conflict-related developments that we're seeing, oil kind of climbing just a little bit on these tensions, but of course the key focus is still that OPEC Plus meeting and whether there will be, as expected, that extension of the policy settings.
Yeah, Heidi, let's get more on the market outlook in the session today. Bringing Garfield Reynolds, who leads our Markets Live Asia coverage. And Garfield, it seems like the stage is set a little bit perhaps for a move high, even though perhaps muted for Asia today.
Yeah, I think that's fair. You know, in a lot of ways, we're still kind of going on the momentum that was built at the end of last week. You're seeing as yesterday was a holiday in the US, and so all we had was futures, which signaled that the upside momentum was still there for US stocks, even with some of the concerns about both inflation and the Fed pushback when it comes to early rate cuts. The environment for equities in particular, and even for bonds, is still seen as being pretty reasonable. That soft landing hope remains in play. If it's not exactly the famous Goldilocks environment, it's fairly close. The bears don't seem to be particularly close by, and there's also signs that the bears aren't particularly hungry right now. So a modest, muted, up path for risk assets, with some concerns about commodities. Oil ticked up again, as you mentioned. We're also seeing London metals up a bit, perhaps a sign that at the end of last week, or all last week, we saw most commodities come back down after some very big spikes had happened, in the lead up to that. Looks like they've now stabilized at about the levels they were before those spikes, which is still elevated. Most of the uptrends are still in place. So that retains that concern, that is there, that economies are a little bit too strong and inflationary pressures are a little bit too strong also for most central banks to relax.
Gav, are we also starting to see perhaps, more encouraging signs of improvement and certainly confidence out of China?
Well, China also remains, a little bit of an anxious spot. The good news is that the data pulse does seem to have turned around a bit. We had those industrial profits reports yesterday. There's a lot of anticipation that the PMIs that we get later this week will cement the idea that the Chinese economy is potentially gaining momentum and certainly has sort of stopped losing it, as it were. So that's a positive. The other concern, though, is that the real estate sector, repairing that is a long and difficult path. And so there were some very strong gains when the rescue package was first announced. And yeah, there are some doubts as to whether you really want to pile in from here, because you've had those strong gains. Can you get fresh strong gains going forward? We need to see a trigger for that, whether that comes from actual easing, which is expected maybe early next month, or whether we see some serious progress on those efforts to relieve the glut in housing.
Garfield Reynolds, who leads our Markets Live Asia coverage. And as we mentioned, one of the sort of positive market catalysts has been China and its creation of the country's largest ever fund to boost the development of its domestic chip industry. And of course, all of this comes as Beijing looks to achieve tech self-sufficiency to bypass intensifying US restrictions. Let's bring our executive editor for Asia Technology, Peter Elstrom. And, Peter, this, I suppose, aptly named Big Fund 3, it certainly is ambitious. I suppose it needs to be, given that I think when we crunch the numbers, we've seen some $380 billion worth of commitments and pledges and earmarked funds by governments worldwide. Does this give China a significant leg up in terms of this tech supremacy war when there are such, restrictions in place?
Yeah, it's interesting to see how these government programs are rolling out in different countries. China, of course, has had a much more proactive industrial policy for many, many years, including in the semiconductor space. They have a program, Made in China 2025, which was aimed at helping them make significant advances in a number of different areas, including biotech and electric vehicles and semiconductors. In addition to that, one of the key questions, though, was how sustainable this was going to be given some of the economic problems in China. As you alluded to, this is the third fund that's aimed at making investments in the semiconductor area. With some of the economic challenges, including the housing crisis, it wasn't exactly clear whether they were going to be able to continue to fund very aggressively in the semiconductor space. So what we're hearing now is this new Big Fund 3, which is roughly $48 billion, has been raised. It is going to be doled out. This signals very clearly that for Xi Jinping's administration, semiconductors remain a very, very high priority. And that's partly because the U.S. has been getting increasingly restrictive in selling China the kinds of tools that they need to be able to develop the chip industry and also to be able to get their hands on advanced chips like the AI chips from NVIDIA that are used to train AI models, so important for things in the future.
Peter, we haven't always seen those big fund investments paying off in the past. There's been perhaps a bit of money being misspent. We saw the former boss as well of the big fund investigated for corruption and removed, of course, from his post. Do we understand how this money could be spent differently, or do you think that China's ironed out the issues that they've seen in the past?
Yeah, you're exactly right. The big funds in the past have had some problems, some challenges. Beijing has not seen the kind of progress in some of the key areas that they like within the semiconductor industry, despite much money being spent in many of these sectors. This is again, a Beijing, a centralized fund. There's a lot of money being spent by the local governments too, so there's a lot of money pouring into these areas. Where we've seen progress is really the older chip technologies, the legacy chip technologies. We're seeing a lot of fabs being built, a lot of progress being made within China to build that foundational layer. Also, the U.S. has not put restrictions on some of that older kind of equipment, the older chip technology. But at the most cutting edge, it's been a challenge for China. You see, as we saw in the market yesterday after this news was announced, you see some of the chip makers in China, including SMIC and Huahong, make some pretty significant increases in their share prices. There's a positive reaction there because investors anticipate that Beijing is going to back these companies, and they want to try to develop some of these more advanced technologies, especially 7 nanometer, 5 nanometer, maybe 3 nanometer and 2 nanometer chips, the kind of chips that China no longer can buy from the United States in many different cases, including the NVIDIA chips that we're talking about. NVIDIA has essentially a monopoly on some of those chips that are needed to train the most advanced artificial intelligence models that are out there. So that's a key area where they want to make some breakthroughs in Beijing.
All right, thanks, Peter. That was Peter Elstrom there, Executive Editor for Asia Technology from Tokyo. And we're about 10 minutes into the session so far for trading. And some of the names we're looking at in particular today, we just saw lines crossing, of course, that drop we've got for Hybe at the open here. SM Entertainment has initiated a block trade, and they're selling Hybe shares around 755,000 at a discount to the last close price. So that's being reflected in that move you're seeing right now. What else we're tracking is Daiichi Sankyo. It's developing a drug in partnership with Astra, and we are showing that its drug has extended the lives of some cancer or lung cancer patients rather. That stock, though, little changed at this point in time. Chip stocks, ones to note as well, not just for the big fund investment that China has made, and we did actually see some Chinese chip makers moving yesterday, but also because we're hearing that Micron is building a new DRAM chip plant in Hiroshima. That's according to local media. Next, we are going back live to the UBS Asian Investment Conference in Hong Kong. We're going to be speaking exclusively with the bank's Asia Pacific president. We'll also be joined by the co-founder of SenseTime and the CEO of India's National Stock Exchange. So really big interviews coming up. We'll have much more ahead. This is Bloomberg.
India decides. As the votes come in, can Prime Minister Modi win a third term? And what direction will India take next? With a focus on the economy, social divisions, and climate change actions that will influence the global story. Bloomberg's Haslinda Amin is live in Delhi, bringing you the latest updates as election results from the world's largest democracy are revealed. Coverage starts June 3rd on Bloomberg Television. Context changes everything.
Well, UBS is holding its inaugural Asian Investment Conference in Hong Kong this week. Let's get back to the event. Our China Show co-anchor David Inglis is standing by with his first guest. Dave.
Yep, we're kicking things off here, Heidi, at the Four Seasons Hotel, and to our viewers, of course, joining us across the world. Thank you so much for joining us. To get us warmed up, no better person, of course, from the bank, UBS Asia Pacific President Edwin Koh joins us here on set at the Four Seasons. Good morning, and thank you for having us here.
Good morning, David.
We were talking during the break. Coming in here, I was just getting off the car. I knew I was going into the Four Seasons. It seemed I was going into a UBS office, though. How did you guys pull this off?
Well, we are bringing more than 3,000 investors from 28 countries to Hong Kong. And it matters to Hong Kong, it matters to us, and to the participants as well. So naturally, we want to put on a good show. and to collaborate with Four Seasons to convert the lobby to a UBS lobby. It's quite something, isn't it?
Yeah.
Even I was surprised when I walked in on Sunday. So the team has done a fantastic job.
So this was the flagship of your former rival, now part of the bank, of course, Credit Suisse, 27 years. How are you guys going to make this one different? Because they've set the bar quite high, I have to say.
Yeah, I guess it's an inheritance. What you do with it is, like the lobby, you polish it up and bring in keynote speakers like Mr. John Lee, Chief Executive of Hong Kong, the Prime Minister of Thailand, Srettha Thavisin, His Excellency. So what you want to do is to take your inheritance and make it better, and that's what we have done, and we're very proud of it. We're very proud of the tradition.
Like a true wealth bank, as you would say, take the inheritance and make it better.
Yeah.
I was looking at the agenda. It seems as if there's also a very big focus on technology and AI. Is that something that the bank came up with? Is that something investors want to hear that you guys sort of unpack a little bit?
Well, the theme of the conference is an eye on the past and the view of the future.
Okay.
And if you look at the future trends, beyond the macroeconomics and political trends, there are clearly trends on AI, there are clear trends on EVs, etc. So what we try to do is to help our clients navigate the future trends for investment. So it is absolutely important to have all such thematics in the next couple of days.
Understood. Now, the reason I also bring up that this was one of your rivals, Credit Suisse, of course, flagship, is it's been a year. This event reminds me of events this time last year. Quite literally going into the iteration of this. We didn't even know if it was going through last year. How has the integration process gone 12 months on?
I think it's fantastic. I think in any integration you go through, the important thing is your clients. And our clients have spoken and voted for it. The net new assets have been going up. Clients continue to find more power in the two brands coming together. For staff as well, there will of course be some noise on duplication of roles, etc. Most of these are all settled and taken care of. In fact, by the end of this week, the two banks should merge officially. We call it the parent bank merger, or PBM. We hope to cross that this Friday, actually.
Okay, so days and not weeks. What was the retention rate? So both on clients, maybe assets if you give us some insights, and also staff, of course.
Staff attrition rate, both voluntary and involuntary, was quite high. That's because of duplication of roles that we have eliminated. We also, of course, retain the best of both teams. So that's about done. On client retention has been very strong. I mean, we are managing in Asia alone $850 billion in AUM, asset under management. That's just about the biggest in the whole of Asia Pacific. If you dwell into wealth management alone, our closest rival is less than half of our total AUM. So overall, I think the clients have voted to stay, voted to put in more with us to manage. And such events actually are a testimonial to the success of both the brands.
Right.
I mean, more than 3,000 investors from around the world, 28 countries. Most are C-suites, and more than 300 corporates as well. So it speaks well for us.
I want to ask you about the cost implications. So the cost-to-income ratio, one of my colleagues fed me this information, on the wealth unit, maybe because of some of the reductions in headcount, fell from over 90%, first quarter, I believe, down to about 67%.
Yes.
So is that a base that you want to hold in the 60s? Is that sustainable in your view?
That's something which we want to hold.
Okay.
But I think it's not just about cost reduction, it's also about the top-line growth.
Right.
We have seen top-line growth quite strongly, as well as our discipline on cost. So I think both these are very important elements. 60% is ideal, and it's something which, of course, through the cycles, you would like to maintain as well.
There are a lot of reports and conversations around headcount reduction. I'll ask you directly, are you still cutting staff?
It's a world that we are in that is very difficult to predict in terms of macro trends, much as we try to do it. So we try not to. And like I was telling most of my colleagues, the best way is to do your job and do it well, so that we can lift the whole brand up together with our earnings and revenues. That's the best way to save jobs.
Right.
So every organization out there, I'm sure, is dwelling on the same topics. So we are no different.
So you're still in the process?
We try not to. We try not to. But
Try not to cut jobs.
We try not to cut, but at some point, you know, every year you have go through the cut because of productivity,
right? Because
of, you know, lower performance, etc. So on behalf of the shareholders as well in the business, it's always right to swap for better and more committed staff as well. So that's part of the process.
And when you look across your business lines, are there specific lines where you think there's still too much headcount, for example? Are there parts of the business equally where you think you might need to hire soon?
We have optimized most. We have optimized most of the position, both in terms of lines of business and the geography as well.
Okay.
So you have to take into consideration cyclical trends, lines of business, as well as the geography. I think for all of that, we are in 13 locations in Asia Pacific. For most of that, we are done.
Okay, for most of that, you're done.
We are done.
When do you expect activity to pick up? Whether that's in markets or in wealth, which are obviously interconnected as well, because you alluded to this, it's been a very soft market for everybody.
It's been strong for us. I can't speak for my competitors.
Yeah, so why are you cutting them?
No, because of the duplication of roles.
Okay.
They're coming together. It's been quite strong for us. Our clients are into bonds. They are investing into the U.S. market for high-tech technology, and in China for the internet industry is coming back. So overall, I'm a fair bit more optimistic now than I was maybe last year when it all started. We are seeing a more upward swing right now for us.
Okay. And in terms of just your geographical focus, are there specific markets you think grow more than most this year?
Well, Hong Kong and Singapore continues to be a big hub for us. China, if you look at structural, still a bit more to go. On the cyclical trend in China, it's strong. Consumer demand, export, etc. The build-up is there. For our business in Australia as well, it's starting to pick up as well. As you know, Australia, we have added the Credit Suisse wealth management into our business. Right? We had a small one, which we offloaded because it was more on brokerage, and now we are bringing it back in a big way. So I think a lot to go for us across the region to work on.
What about India?
Rebuilding India for us. Credit Suisse has a decent platform. We are building on it as we speak for wealth management as well as global markets and banking. So it's a good market for us. But still early days in India, still a lot of heavy lifting to do.
Okay. Final question for you. Just across the harbor from where we are, you guys are constructing this big building. When are you guys moving flats, as they say?
I hope earlier, David, but it looks like it's 2026. And yes, there's enough room to accommodate everybody. As you know, we are in 2 locations now, IFC and ICC.
Right.
The 2 teams will merge in 2026. And I was telling the developer I would still like a rooftop swimming pool.
Is that for you or the clients?
For our colleagues' children. You know? I always believe in having that kind of activity for their children. So it keeps our employment tight and also our culture as well. So that's something which is on my wish list.
Okay, we look forward to the opening, and if we could take a dip in that pool too. Edmund, thank you so much for having us here at the conference.
Thank you.
Edmund Ko there, guys, Asia Pacific President at UBS. Back to you guys. Heidi, Mel.
Thanks, Dave. Yeah, really great interview there. And of course, Dave Ingles at the UBS conference for us. And we're going to be back in a few more minutes with him. Really great interviews coming up. We've got the SenseTime co-founder, Zhu Bing. We're also going to be hearing from India's Stock Exchange chief just this hour alone. So just stay tuned for those interviews. More ahead. This is Bloomberg.
Take a look at how European futures are shaping up, and of course it has been sort of a little bit of a wandering session globally, given we have had the closure of US markets for Memorial Day, but we've seen a little bit of upside there when it comes to European stocks. There we had ECB's Valerie talking about the concept of consecutive cuts there from the European Central Bank official. Futures are looking a little bit positive, both the DAX and Euro Stocks 50 futures up by just about 0.1%. We did see cars, some of these rate-sensitive utilities, the better performers of the day. This is Bloomberg.
We're 30 minutes into the trading session so far this morning, and look, we're really not seeing too much movement across the board here. We've got the broader gauge that's sitting flat, and I was just taking a look at trading volumes as well, and we're pretty much off the 20-day moving average. So thinner than usual. But why that is, well, it really relates to what we're expecting in terms of economic data, because we've got fresh inflation numbers that are going to be dropping from Australia to Japan, the Euro region as well. We've seen some of those signals coming through. We've been hearing from the BOJ governor as well, just really wanting to get more of a sense of whether we are seeing those price pressures receding, and whether that gives central banks then the scope to think about moving or cutting their rates. So that's sort of the state of play right now. As you can see here, most equities not really moving this much right now. But let's get back to the UBS Asian Investment Conference that's starting today in Hong Kong. And our China show co-anchor, David Ingles, is there with our next guest, Dave.
Yeah, so Bill, we were discussing this earlier, and I was, when we did this curtain raiser of the events about 30 minutes back, I was mentioning in the conversation we had earlier on with Edmund Coe, I was mentioning it doesn't seem, partly it feels like a banking conference first and foremost, because this Four Seasons is effectively drab in UBS branding. But apart from that, it really doesn't seem, when you look at the agenda, that it is purely a banking and finance conference. There's really a strong brush of technology as far as the conversations in the panel here goes. And certainly, no one would be surprised that AI and Gen AI is certainly a very big topic of conversation, particularly around when you have geopolitics, of course, and chips, and of course, NVIDIA just reported last week as well. So to talk us through this iteration in their context, joining us here on set is Bing Xu, co-founder and executive director at SenseTime. Good morning, and thanks for making time for us and coming on the show.
Thank you for having me.
You guys made big waves, I think, about 5 weeks ago. SenseNova.
Yep.
That's the new project. Your stock price went absolutely through the ceiling when that announcement was made. Can you provide us a little bit more information on SenseNova?
Yes. Yes, happy to. So SenseNova is our answer to ChatGPT, our answer to GPT-4. So we are a company of 10-year-old. We're not a new company. We started in 2014.
Yep.
With the help, actually, from NVIDIA, donating 80 GPUs to us. We used to be the earliest Chinese research team that did a lot of paper on deep learning and computer vision. And we started a company in Hong Kong, and they go set up offices in Beijing, Shanghai, etc. So we listed our company a little bit more than 2 years ago.
Yep.
It's been 10 years for us. This year is our 10-year anniversary, and we released our newest models to compete with the best models in the world. And of course, we know that there will be a GPT-5 or even GPT-6 coming up, and we're also still trying to make usage of the resources that we have to remain catching up. So historically, during the past 10 years, we raised $6 billion in total in terms of capital, and we are a big investment. We are actually a big investor in NVIDIA chips. So we bought more than 40,000 NVIDIA chips during the past 10 years, and we leveraged those chips to train all kinds of models, computer vision models, large language models, diffusion models for generating images and videos. So we're trying to put those models into products and also release it to the industries in Asian markets.
So you mentioned a couple of things. Let me pick up on your plans to monetize them, because the competition, as we know, in China is quite fierce. Do you have any specific targets for this specific AI model, for example, or others?
Yes. So firstly, we believe that the AI represents the future for the next decade or two. The one that having a leadership in AI technology will be attracting a lot of customers to work with them. So I see that already in the US. A lot of customers working closely with leaders like OpenAI, like Anthropic. And I believe that in the Asian markets, there will also be leaders as well. So we try to be that leader. But of course, there are shortage of resource here in Asia in general. For instance, the shortage of compute. I think in general, it's like a 10 times of gap of the compute resources that we have here compared to the US leaders. But I think Asian markets never lack of talents and never lack of data. So in terms of talents and data, I think eventually we will also be able to, even though that we have lack of compute, we're able to, make sure that we squeeze the last bit of the compute and then,
right.
Try to be there.
That brings up the topic of, and you mentioned you work with NVIDIA. You invested a lot, of course, in buying NVIDIA inventory. You know, of course, of these restrictions that the U.S. has placed on China's access to some of these technologies. Is that a problem? Is that a problem for the sector? Is that a problem for you? How are you working around that, for example? And do you think that in any way constrains China's ability to meet its own AI objectives?
I think firstly that does impose a challenge to everybody, not just the companies in China, but also companies in the US. In China, we also do a lot of fundamental innovation. We also publish a lot of papers. We do a lot of open source. See the open source models that we released recently. Right. Our open source version of multimodality model called Intent VL. Actually, it beats GPT-4V. So we just open source it. And we recently, yesterday actually, we open sourced another one, a large language model that does really good on maths, and it beats almost all the models. But
on what metric?
Well, it's generic. The tests, the benchmarks, and the global, the renowned benchmarks. So on the maths wise, we also beat almost all the models, but the GPT-4o that released recently. So we also does a lot of this open source, and we try to work with the global community. We try to share what we discovered in Gen AI, in AGI in general. I think that imposes a challenge to all of us. But indeed, that there are also domestic chips coming up that's catching up with the international leader, the chip leaders, really quickly. And we're also working with these domestic chips to still expanding the compute that we have.
How far behind do you think the domestic chip sector is compared to the West? Say, put that to us in years, for example.
Well, it's hard to tell. It's actually hard to tell because, I believe that in the long run, there will be a smaller gap. Okay. In short term, right now, I think somebody says 1 year, somebody says 3 years. But I think that's not the point. I believe that for AI, it's a long run. It's a thing that's going to be with us for the next decade or two.
Right.
So in that time frame, I believe that the compute is a commodity, right? Compute is a commodity. You're always able to access compute in different ways. It's just currently there's a challenge to that, but in the long run, I believe that the compute won't be a gap, and the talent will also not be a gap because as long as there's compute, talent will come and leverage that compute to develop AI. And data here in China, I think it's broader and deeper in terms of the data resource that we have here. Because if you just use the internet data, you will, use up.
It's finite.
Yeah, you can use up the internet data very, very quickly.
Yeah.
But the real world data, the amount is huge, and it's model. And there are so many data that's deep in the industries that you have to work closely with the industry leaders to really dig out those data as well. So I think in that sense, we can actually dig and craft data better here in Asian markets.
I have two more questions, and we don't really have a lot of time. We could spend all day here. When does your company start making money? Because you've so far been a public company for 2 years, you're a 10-year company. So far you're burning through money, cash included.
Yes. So we raised $6 billion, and we invested like 1/3 of that capital to R&D.
Yeah.
We have a team of more than 4,000, and most of them are actually researchers and engineers. We also invested in our own infrastructure. Since core, we invested closely a little more than $1 billion to have such a GPU infrastructure to help our customers and help us to train the models as well. So I think that currently we still have a safe cash cushion.
Okay.
And more importantly, we are transforming this company into a profitable company in just 1 to 2 years.
Okay.
So that's what we are trying to do. I believe that as a listed company, becoming profitable will help us to run in these next 1 or 2 decades long run, right? For generative AI, for AGI.
So to summarize, that you think you'll be profitable next year. You don't see the need to raise capital at this point in time. I think your current valuation as a company is about $6 billion, that's US dollars. How much do you think your company's worth?
I think there's a huge gap comparing to the ones in the US. I just learned that the X.AI also raised $6 billion just recently. I think that the Asian market is a huge market, and the world needs a second option for AI export. And I believe that US will do really well in leading the AI development, and China will also be keep catching up with the US with all the talents and data we have. And I think that we're going to do fine in the long run globally. We're going to democratize the access of AI, allow everybody will have access to better and better AI technology. So the slogan of the company is very interesting because we started the company 10 years ago.
Yeah.
And our slogan is to because 10 years ago we didn't know what's going to happen right now. So our slogan is called 让人工智能引领人类进步 to lead human development with artificial intelligence. So it's hard to imagine that we come up with that slogan 10 years ago.
Yet here we are. It's almost like AI predicted it. Bing Xu, thank you so much.
Thank you so much
for taking the time. Let's speak again. We barely touched the surface there. Heidi, sending it back to you, of course, just the co-founder there of SenseTime. Heidi.
David Inglis there, and of course we'll have a lot more from Dave and from the UBS Asian Investment Conference in Hong Kong, chatting with industry and business leaders, including coming up the National Stock Exchange of India CEO, as well as a former IMF Economic Councillor. Olivier Blanchard will be with us. This is Bloomberg. All right, let's head back to the UBS Asian Investment Conference in Hong Kong, where David is with our next guest. They run one of the world's largest exchanges, Dave.
Yeah, to be more specific, Heidi, that's National Stock Exchange of India. Joining us here is the CEO, Ashish Kumar Chauhan, here, of course, at the UBS conference. It's nice to see you and good morning.
Thank you.
There's so many things I want to ask you about. First, let's get to the news. You had an application recently which didn't get the thumbs up to extend trading hours. Are you going to revisit that application anytime? Reapply for that anytime soon?
No, currently we don't have plans because this is an ongoing process. At some point, India has to do what world does in terms of longer trading hours. But currently, probably brokers think it's the cost vis-a-vis the benefits they get by appointing newer people and things like that. That's where I think they opposed it, some of the smaller brokers. And broadly, currently that process is stopped, and we'll see what to do later on.
Okay. So we'll take a step back from that. I think there was another one on Friday. I think SEBI also came out with some guidelines on effectively trying to ensure that some of the real-time stock data doesn't get misused. You come to mind as I wouldn't say a direct target of that, but you're affected by that. Does that have a cost implication? Do you see that being disruptive in any way to trading operations?
No, it's basically in India, the data is actually democratized, so actually exchange data. So we are supposed to give the data on exchange websites, and also the brokers get the data free for their customers on real time. So effectively, what SEBI is trying to do is to ensure that the same data doesn't get misused for gaming outside of the exchanges and also manipulating people's minds and things like that. So that's where I think this regulation is more for stopping illegal usage of data, nothing to do with the income of the exchange, because exchanges don't derive much income in India from data, unlike other countries. So broadly, it's more of sort of a public good kind of an activity.
So others outside the market, stakeholders, don't have to worry. We're not even going to see any effects of
Not
that
at all.
behind the scenes. Okay, how's the market doing? Elections, post-elections, you're smiling. Take us through what's going through your head.
No, markets are even now at the all-time high, but in a way they could have been slightly higher. It's just that the market has taken a sort of a pauser, waiting for the election results to come.
Right.
And six stages have gone. So one stage is remaining of the election. June 1 it gets over. June 4th is the result. So broadly, next 1 week will be a little sideways. That's my current understanding.
Okay, and that goes into one of, I think you're speaking at a panel here at the conference on, you guys do very well as far as attracting retail investors and the flow. What do you guys think you're doing well, and what are the best practices you think some of the other exchanges in this part of the world can take from that?
In a way, India is a large country. It's 17% of world population, and it's highly digital country. The remotest corner of India, everyone has mobiles and which are smartphones, and very, very nice bandwidth at extreme low cost. So people are able to connect to us. We have now close to 95 million unique investors registered with us.
95 million?
Yes. If we were a country, we would be in top 20 or something like that.
Yeah.
But effectively, lots more people have come in post-COVID. When we were going into COVID, we had like 25 million unique investors. And we are an ID market, so we know each investor, even their phone numbers and their addresses and email IDs. So there are not many countries with that kind of population in the world. And so we have basically because of automation and also the growth. Young people in India are earning more than their parents at the retirement age because of the way India has come up. And that's where they have more money to spend, but more money to save. And also their parents were investing in physical assets like land or in gold and all.
Yeah.
Now youngsters want to sort of invest in equities. So that's, I think, a good change that has happened. Financialization is now happening. Formalization of finance is happening with all the high-tech things like direct benefit transfers and sort of e-payments.
Right.
They've all helped get more people into the formal investing.
Right. So let's help the massive retail base that you guys have. Do you think, well, not you think, well, you could also give your take if you want. Based on the conversations you've had with brokers, is the market expensive?
Currently...
20 times, let's say?
Yeah. Basically, for me, I have seen when a country grows, say you take Japan in 1970s and 80s, or even China, for that matter, Europe. When the countries grow, you may think, because people actually discount the future, not the past. What you say today, why something is expensive or not, it's about yesterday's earning and today's price. Whereas what the market is actually telling you is that they are looking at tomorrow's earnings and today's price, right? So that's where the dichotomy for people like me and you who don't invest, who are not allowed to invest, we look at the past and try to say that future here looks a little overpriced. Whereas in case of China, you can see the price earnings is very low because people don't have a hope of earnings going up. So that's where the price earnings look, although the earnings may be higher, they think that earnings will go down. While in India's case, people think the earnings are going to go up. So countries and societies which have a higher hopes of growth, those countries will have a longer term price earnings higher. The countries which do not have a future hope of good growth, then their price earnings will be lower.
So to clarify what you're saying, are you saying that China doesn't have a visible earnings growth story?
At least their investors think that the earnings will continue to go down year on year. And it cannot be like a blip for a year, but like on a 10-year scale, 20-year scale, that's what people.
There's a premium being built in
Yes.
into the market. I mean, I think you've been in Hong Kong at least twice in the last 5 or 6 weeks or so. I saw at the other conference as well, who will go unnamed. At this point, what's the sense you're getting from investors here? Because it's the same group of investors that have taken money, allocations from China, cyclically and tactically taken them to India, and might be pulling that out of India now that the Chinese market is starting to come alive.
China has, in a way, last 3 years also, China has kind of promised quite a lot, and then it has not performed, because China is actually a much larger market in terms of the numbers. And each time people have, like post-COVID, people had a feeling that there's going to be huge growth. It didn't come out, and they had to lose money in a way. Second part, I think people are worried about whether if they make money, whether it will come out or it will be allowed to come out or not. So that's also an issue. Well, as I met a few investors yesterday, today also I have some meetings. What they tell me is that post-elections in India, there's a huge amount of, the results, huge amount of money waiting to come in. So it remains to be seen how both of us, both countries perform, China versus India. And
should we look at it as, a zero-sum game? Can both markets, you think, perform, or is it one over the other?
There is enough and more money waiting in older countries, because older countries don't see older by age population. They don't see that kind of growth in their economies, and so they are willing to invest in countries with expected higher growth, and that's where many of them are coming into younger countries.
Mr. Chauhan, I know you have a busy day ahead. We'll let you go. Thank you so much for joining us here. Ashish Kumar Chauhan, their NSE India CEO. Bell, back to you.
Thanks. That was David Ingles there. And we're going to have a lot more ahead from the UBS Asian Investment Conference in Hong Kong. We're going to be speaking to a stellar list of guests, including the former IMF Economic Councillor, Olivier Blanchard, and former RBI Governor Raghuram Rajan. We'll have more ahead on Daybreak Asia as well. This is Bloomberg. Taking a look at some of the movers here. We're nearly 1 hour into the session so far, and a couple are standing out in particular. Firstly, you've got SM Entertainment that's dropping here. We had Hive actually that announced a block trade of SM shares at a discount to the last close price. So that's being reflected in the moves you're seeing here. Hive itself as well, a little bit under pressure so far. What else we're tracking is over in Tokyo this morning. So you're seeing shares of Daiichi Sankyo here. They're in focus today. We actually saw a drug that it's developing in partnership with Astra actually managed to extend the lives of some lung cancer patients, but again, not being reflected so far. We're just seeing a little bit of weakness broadly in equities today. Chip stocks, of course, one to note because we've seen Micron, for instance, building a new DRAM chip plant in Hiroshima. That's according to local media. But of course, Chinese chip stocks, the other big focus when markets open in Hong Kong and mainland China. We've already seen some of those chip makers moving yesterday after Beijing announced its largest ever chip fund to propel the development of its domestic chip sector.